Hey, this is Lance from Theta Traders, and in this video I'm going to look at a calendar, actually diagonal spread on IWM. We're going to look at really close strikes, start with a very small credit that might end up being a bigger credit, and I'm going to look at the Analyze tab on it to see if it makes sense or not. So the trade was from a member in thetatraders.com. We're going to be buying the September 6th IWM contract, buy the September 6th 200 put, sell the August 30th 202.5 put for a very small credit. Let's look at the Analyze tab for it. And on the Analyze tab, you could make a pretty large profit if we go slightly above or right at 202.5 at the August 30th expiration. But after August 30th, that sold put would be pretty much worthless at that point, which means you'll be getting the full credit of that sold put. The bought put would be, since you bought the put at 200, it's still not doing too bad on it. So because of that, you could get a very good big profit tent. Hey, Steve, I'm just starting the recording now. I'm looking at the Analyze tab on the trade that you just posted. So if you saw the 202.5 for the August 30th, and we close right at the 202.5, that sold put would be worthless. That means you took in the full credit of the 202.5. And was it August 30th, 202.5? You'd be taking in the 83 or so dollars for it. The bought put, though, would still be okay because you bought a 200. It wouldn't decay as much, and you would get a good profit here, a little over $150. Let's look at what happens as I change the expiration date. I'm looking at the T0 line. Obviously, if it's a big down move right away, it's going to hurt initially, but there's no risk on the upside. It's fine if it stays where it is. So I'm just going to be moving the T0 line. As you can see, your break-even point, that red line, gets lower as you stay in the trade longer. And then around 8/12, August 12th, it's around, what, 16 days or so. We have a pretty good profit 10 here. Break even around 212 or so. Go ahead, Steve.
I was going to say, what are you analyzing this with?
Thinkorswim. I'm just on the Analyze tab.
I don't have Thinkorswim, so.
Okay. So I just placed a trade on Thinkorswim, and this is at current trade. The purple line is a T0 line. That's assuming implied volatility doesn't change. We're just looking at what the value of the whole position would be based on if IWM moved.
The nice part is volatility change doesn't hurt much with this position.
Yeah. Calendars is usually good for it, especially if there's decent IV, but not super high IV.
Agreed.
I like the T0 line. The purple line, as I move out to the future, you're lowering your break even every day, which is good.
About a penny a day, depending, something like that.
Or and then, do you typically stay in the trade about half the trading time, like 15 days or so?
I could be in the trade 1 day or 15 days, something like that.
Usually around 15 days, you'd be out no matter what?
I have not held one that long. Yeah, no longer than 2 weeks. Yeah.
Right. Obviously, the big issue is if there's a big down move, you're going to be at a loss, and there should be a set stop loss at some point there. This is going to be hard to figure out because it's a dynamic trade. As you can see, the break-even point is lowering every day as you stay in it. See,
and that's one of the things I like.
Go ahead.
I said that's one of the things I like is that the theta helps you every single day if it goes against you.
Yeah, that makes sense.
I mean, obviously, if it kept going down, you would continue to lose, but that's not usually how it works. And that's why I would only do this on an index. I wouldn't do it on an individual personally.
Makes sense. Yeah, it's a good curve. Me personally, if I was setting it up, I'll try to get a little bit more initial credit. Obviously, if you're scaling up in a lot of contracts and your commissions are really low, that's definitely a factor, which I don't have. Because if I'm paying 65 cents per contract on these compared to, what are you paying, 3 or 4 cents?
I'm paying. So, I apologize. I have to take this. It's the missus. 1 second.
That's okay. I'll just keep thinking about it.
I'm going to put on mute. I'll be back.
Sounds good. So looking
Okay.
at it, I think the trade makes a lot of sense if you're staying on for about a week or so. Yeah, 14 days, or even earlier if you're getting a decent profit. The issue is you're not going to have much initial credit when you start the trade. You won't necessarily make a lot of credit when you're out of the trade. Although here is, let's go about 15 days. At about 15 days, if the market stays where it is and IWM's at around 223, so if we stay where we are, you make $8, $9 per contract that you're doing. I'm going to look at some other possibilities to try to get a little bit more initial credit than that, just to make it worth it for those that have higher commissions. So I'd still probably buy around the 200. Probably have to go a little higher on the sold put, maybe around expected move or so to a 7.5. And let's look at what that one is. I'm looking at trying to get a little bit more of a initial credit on it, just to make it worth it with the commissions that you pay. So I'm going to look at the same bought put. Let's go to around 207.5 for the sold put. Because then you're taking in more premium on the sold since we're closer to in the money. So the 207.5 is taking in about $140 instead of $84. And the bought put's the same anyway. So your initial credit would be higher. We're looking at around $60 credit.
How wide did you make it?
It'll be 7.5 here.
Yeah, and my goal has always been to keep it as narrow as possible. Like,
Use less buying power that way.
well, I really don't have a buying power issue, Lance.
Yeah.
In Fidelity, it's not an issue.
Okay.
On Tasty Trade, it's an issue. But
Let's look
Fidelity,
at a 5. Let's look at a 5 with. I'm going to sell the 205 instead of the 202.5.
I do them at $5. I don't do them wider than 5.
Makes sense.
And that's me. I mean, like, obviously I could be wrong.
All right. So if you do a 5 with, you're getting about $27 or so. So here's what the analyzed graph looks like at $27 instead of the 3. 223 right here is where we're at. Start at today. Yep, the down moves will, I mean, it can hurt a bit. If you have a dramatic down move right away, it's obviously going to hurt. But it's good because if it stays where it is or goes anywhere up, you're good. And if it goes up, you can actually get out really quick.
And that happens all the time.
Too. Yeah. So let's look a few days out, about a week or so. If you look here, yeah, that purple line's looking good. You could make, I'm trying to see where the numbers are. Here making $20 or so if we went up in about a week. This is good for if you're sizing up on it. And then, yeah, it's hard to know what, if I'm going to do this mechanically, how to do a certain target profit or stop, because it's so dynamic and it's moving every day.
And that's my problem too.
Yeah. I'll have to reflect a little more on it. But otherwise, I think it's a good trade, especially if you could get the $3. I was trying to get fill at the 3 and it wasn't filling. I went down to 2 and it wouldn't fill. So that's why I didn't take the trade. But obviously, if you get into the situation where it happens, yeah, might as well scale up and enter it if you like it.
Well, they definitely fill, but I mean, IWM is extremely liquid.
Yeah.
But yes, you are taking a trade that is, I believe, very good, making it hard to fill.
Yeah, that's true.
Yeah.
So if it's something that I'm going to go over with members as a possible trade idea, I would have to consider that to make sure that people can get filled and also get a more initial credit. So the 5 width seems fine. I don't know what the buying power use is. It's about, yeah, I'm different on thick or slim now. So I can look on Tasty. Tasty was low. I think it was like $250, right?
I'm
Tasty
not
was
sure.
reasonable. Yeah. Well, do you know how much buying power it is per contract in Fidelity?
I don't, but my assumption is it's the max debit minus the
The
credit
credit.
minus whatever they might view the calendar worth. Is that,
Yeah.
there's definitely value in that calendar.
Right.
Hence
Yeah.
your question.
Right now, the max loss is looking at around $445 on a 5 width. So if you do a 2.5 width, it's probably around 250, a little less, maybe 230, 240 per contract. It makes sense to go a little lower. Yeah, I like the trade if you could get filled on the short width and just do a lot of contracts. But I'll explore more on a little bit bigger width. I wouldn't go crazy like 20, 30 widths on these. 5 to 10 width might be more reasonable. That's also more like possible with members to take. Because that's also an issue, a factor I got to consider if I'm doing them too. Because yeah, not everyone has the same buying power and commission that you have. So
I'm aware it's a good deal. Yeah.
yeah, it's a good deal.
And on a small trade like that, they might only charge me 10 cents a contract. Like I don't understand how that works, but I think they cap it at like a percentage of the
Uh,
trade also.
oh, that's good. And thick or slim, if you close something out at 0.05, they don't charge commissions on it either. So that could be a factor too.